On YouTube right now. And here we go, guys. Welcome to the education room. And that's exactly what it is. It's an education room. I do not, will not, shall not call trades. Don't give trading advice. I am here to teach you guys to read indicators. Good morning, Shush. Glad you made it back. Didn't scare you off yesterday. That's a good thing. Guys, everything that I do in this room, and just brace yourselves, I'm going to ramble for a second. Everything that I do in this room revolves around really being simple. No news today. Woohoo! Um, really taking a very, almost boring approach to using the software. But I want to show you something, and I'm going to use NinjaTrader as an example. But this is applicable on either platform. Every day I start with momentum, path, and entry. And I was having the best conversation with an amazing human last night. And I was like, you've got to learn the basics. You've got to learn the simple. You've got to address the very core. And you'll work these things back to everything. So when you have momentum and you can recognize this one advantage that comes from one rule, um, momentum is rule number one for a high probability trend trade. But momentum must also not be fought if you're looking for a counter trend trade. And momentum must not be fought if you are looking for an HVA trade. And momentum is mandatory if you're looking for a momentum trade. And momentum works its way into everything. And the same thing is true with termination conditions. In the high probability trend trade, a termination condition doesn't do anything more than say, hey, don't take a trade into this line. But that same line that is a termination condition can become a strong top or bottom. And if you don't understand the first lesson, you don't get the second lesson. And if you can't recognize a termination condition, you can't follow the rules for an HVA trade. You can't follow the rules for a momentum trade. You can't follow the rules for a chili dog trade. You can't follow the rules for really any trade. And then the same is true in defining your entry area, believing that there is a very specific spot where your trade originates. Guys, you learn that habit in the high probability trend trade, but you apply it in every trade beyond. So when we talk about boring, this boring, there's too much time in between trades plan, guys, I promise you, it is a giant golden door to the rest of your trading career. Keep it very focused. Good morning, OG. Keep it very simple. Don't outsmart yourself believing that it takes more moving parts than it actually does. And what you'll find is that trading becomes pretty low stress and it becomes pretty mechanical, almost robotic. So as we go through, we're going to talk about TradingView and we're going to talk about NinjaTrader. I will start on TradingView, guys. That's going to be my new go-to because a lot of people are coming over from the funding company realizing that they would rather win than lose. So everything that I give you in TradingView, guys, can be used in your pursuit to pass evaluations. And there's a lot of you in the room that are already passing evaluations with these, myself included. So let's get moving on the day. And remember, it feels like a lecture, but this is a discussion. If you have a question, raise your hand. If you have a concern, raise your hand. What's up, Josh S? Nice to see you back in here. And guys, most importantly, if there's anything that I can do for you, don't hesitate to ask. We're going to learn the simple rules first. That was my little disclaimer in the beginning of the room, guys. We're going to keep it simple. We're going to keep it focused. So when I hand you the rules, as I am about to do right now, I'm going to drop in the room your plan. Doesn't have to be your plan forever, but it could be your plan right now if you want the path of least resistance. I'm also dropping a trade journal in there. TradingView users, download these, take these, read these, learn these, live these. The plan that I give you each and every morning is called the KISS plan, the Keep It Simple Stupid plan. And this plan is a stepping stone in your learning journey, and it's designed to teach you how to read the indicators, really. It's designed to get you comfortable with what you're looking at on a chart. The plan, the trades within the plan, I should do this here. Let's go The trades in this plan are, because we got to be grammatically correct, are designed to optimize your chances of success, which means that Nexgen, specifically John Novak and I, have taken tens of thousands of pictures in our study. Come on up, don't leave me hanging. 21,648 pictures, guys, and my brother has 4 or 5 times that. We have done an enormous amount of study. We have traded this live, we have simulated, we have back tested, we have done everything that we can do to prove that the trades within this plan win more than they lose and give that potential. So when you talk about the KISS plan, it might be pretty boring for most of you, but guys, it optimizes your chances of success. And there is this cool phrase that says, confidence comes from the memory of success. So the more you can find the good stuff in the beginning, the more likely you are to stick to it, to pursue it. Through study, simulation, class feedback, and practice, you're going to write your own plan. Should you feel you need it, you'll change it up. You'll see more. You'll do more. You may latch onto a trade that just works for you. That's cool. But it's all going to come from your ability to read the charts. So in the beginning, practice these very simple rules. And more importantly, post them in the room when you do. If you take a trade, and let's see if we can find an example here. We'll just take mine. If you take a trade, drop it in the room and say, hey, Mark, I noticed that the triggers were up, and I noticed that there was room to trouble, and I noticed that I was on the weak side. Did I read this chart right? And guys, it's either yes or no. If it's yes, high fives. And if it's no, you get a private session on how to read it more accurately. This is where I entered. Did I follow the rules? Yes or no? I don't know. If you did, cool. We're going to talk about it. That's actually where we entered. Does my first target make sense? Does my stop movement make sense? Guys, every time you post in my room, you get a private session with me. It's just the two of us, ignoring everyone else in the room, talking about your chart read, making sure that you're reading the indicators correctly. And my hope is that you're practicing the rules, even if you make mistakes, especially if you make mistakes. Practice the rules, like let your focus be, I'm going to follow this plan. I'm going to try to stick to this plan best that I can. And any misunderstandings that I have about this plan are not failures or even mistakes. They're just opportunities for Mark to get me in a better place with a little bit of feedback. So the people that post the most typically get to where they want to be the fastest. I'm going to tell you that right now. That is gospel truth. People that try to get lucky, that try to amass simulated wealth by, oh, I'll just trade 100 lot and jump in and fight everything. Guys, your brain doesn't know that you're a jackass, and it thinks that you actually made $1 million. And the second you apply your real money to it, it's like all that luck runs out. Short-term victories very often create long-term failures. So even if you make mistakes, and you will, try to adhere to the plan. The second thing is, gosh, keep it simple. It doesn't have to be difficult. There doesn't have to be a lot of moving parts. There doesn't have to be nuance. Following the plan in the beginning can be unbelievably black and white. But you've got to learn the looks. What does it look like when my rules are met? What is the pattern that produces more wins than losses? That's your edge. So that's where the second piece, post in the room is the first. The second piece is, guys, use this spreadsheet that I give you every day. I've been adding to it too. Trend trades, what do they look like? I added one this morning. Heck, I stole one from Lucy yesterday, her first week, and she's already nailing the pattern because it doesn't have to be difficult. There's a momentum trade. This is the second trade in the plan. Some of you will take these, some of you won't. That's okay. It's your right. There's ideas on management, reasons not to take the next trade. There's a place for you to start putting all of your pictures. And I'm going to tell you right now, your goal should be 15 annotated pictures a day, whether it's a trade or not. Maybe it's just a chart read. Maybe it's, hey, this is an area that I can't trade into anymore. This is an area where the rules aren't met, right? And just reinforcing those rules. I still take those pictures. I'll show you the one that I sent my brother this morning. This is it. So tempting to go counter trend. Fibonacci, three divergences. Man, a lot of you guys will take this trade. Those triggers right there. From about 8,000 losses, I finally learned don't fight strong triggers. So I just took a picture reminding myself that my rules aren't met, that there's no reason for me to try the short. And guys, ultimately the market did go back up. So the patterns that I learned serve me, and they serve me well. And then finally, there's a trade tracking sheet. Every time you take a trade, every time you pull the trigger, win, lose, or draw, especially lose, take a picture, annotate your chart, talk about what you saw, and then most importantly, guys, put the feedback from class in there. You're going to get the best information I know how to give you when you post in the room. So when you start collecting feedback, you can begin this exercise. This is my morning every morning. Before I ever take a trade, before I even put on a live account, I keep it on simulator until I've gone through this. Every morning, I look at what I did yesterday and I ask myself what worked and what didn't work. And the things that work are what I'm going to focus on today. And I know it sounds silly, right? But if you do that every morning, hey, this has been great for me. I'm going to put a note on a piece of paper, make sure you have momentum. And you start to get better and you start to lean on those advantages. And the things that don't work, and man, they're going to be there. Don't fight that. The things that don't work tend to repeat themselves, taking success. And now, are you not only focused on the goodness, you're also focused on avoidance. You're focused on maybe not trading into termination conditions or not jumping in too soon or not putting your stops in the wrong spot. Whatever your thing is, guys, the feedback from class will tell you exactly what your thing is. And then I will teach you exactly how to beat that thing so that you can put it in the rearview mirror and not worry about it moving forward as you build good habits. So every morning takes 2 to 3 minutes tops. Every morning, go through this. You'll get there quicker. So post in the room, track your trades, and guys, we're going to learn one pattern. This is it. We're going to define a trend. We are going to wait for a little fight in the middle of the trend, and then we're going to hope that the trend resumes because we entered for a trend trade. That's it. And it looks the same every time. Trend, fight, trend. So we're going to use trigger lines. We're getting into indicators now. What am I looking at? What are these indicators? On your large chart, there's two charts. On your large chart, you will only have small triggers. That's it. It's two lines, create the small triggers. You're going to use these to define the trend. You're going to use these to help a little bit with management. On your small chart, there are small triggers just like the large chart, and then there's also large triggers. Now the large triggers, you don't need those for trend trades. And if you wanted to take them off of your chart while you only focus on the trend trade, that would be fine. But the large triggers are used for the second trade, and it's what we call a momentum trade. Not even going to cover that this morning. That's advanced. We're focused on trend trades. We're also going to use areas. Now, everybody write this down in your most delicious crayon. Areas are bouncy. That's all you need to know about areas. Areas are bouncy. If the market hits an area, that area can create a bounce. Now, they all have names. So what I'm doing now is I'm just giving you the names and kind of how they're used. So you're going to see pink and yellow. These are one-to-ones. These are dots. And these dots are 100% Fibonacci alternates, which institutional traders love for targets and entries. So we see them the same way the people in charge of the market see them. In an uptrend, anytime one gets hit, it's an area of resistance. In a downtrend, if it gets hit, it's an area of support. So that's a very blanket term, support and resistance. We're going to use these one-to-ones as targets. If you're in a trade, you're going to see it off in the distance. You're going to be like, yeehaw, I hope I get to that one-to-one. If you're at that one-to-one, that's what we call a termination condition. You're going to say, I'm right here. I'm knocking on the door. I'm not going to initiate another trade because that one-to-one may create a big ugly bounce against me. So a termination condition is something that can stop the market. And the guys, we're also going to use these for entries because the whole methodology is let a trend get established, let a fight happen, and we need that bounce to put us back in the direction of the trend. So one-to-ones, horizontal lines can be bouncy. Divergence highs and lows. This means there's a loss of momentum. That's all it is. If you ever hear divergence in this room, it means that there was a loss of momentum right at a pivot, at a very specific number. These can be used for targets. If I'm in a long position, I may use that divergence high as a target. If I'm in a short position, I may use a divergence low as a target. If the market is sitting right at a divergence high or low, then it's a termination condition. I will choose not to enter directly into it. Divergence highs and lows are not used for entries. You're going to see outer bands and mid bands. These are just moving averages, guys. The outer bands, the white dots, these are points of exhaustion. These are where, man, that market's been trending up. Here it goes. Life is good. And then it's like, whew, I'm beat. And these are great for targets. And these are awesome for terminations. We don't use them for entries. The mid band is the one in the middle. So we've got the extremes, and now we've got that little center. And the mid band is magenta. If price is below it, it'll behave as resistance. It's green if price is above it. It can behave as support. And these are going to be used for targets. Maybe I'm in a short trade. I'm going to get out at the mid band. These are used as terminations. While I'm right at the mid band, I'm going to wait to get to the other side. And these can also be used for entries. I'm looking for the perfect trend trade. That mid band can create a bounce and put me back in the direction of the trend. So when you put them all on a chart, it gets a little noisy if you're brand new. I totally get that. But it's not. All you need to remember is that lines on a chart are bouncy. Is everybody cool with that? Give me a why, because we'll go head first into the plan, defining trend trades now, if you guys are good with that. Lines are bouncy. Don't care what they are. Lines are bouncy. Cool. So you do have two charts. Big chart and a little chart. 2 out of 24, like, yeah, 3 out of 24, I like it. Your large chart is a glacier of a chart, guys. It's a slow chart. It's a 15-minute chart. You got to pack a lunch sometimes to get from the top to the bottom bar on a 15-minute chart. So we're going to use the 15-minute chart to define the direction of the market, making sure that we are in fact trading with the trend. We're going to use it to define the momentum, and we're going to use that momentum as a tool for management. We're going to use it for key targets. When we're in a trade, we're going to see those bouncy things. What a great place to get paid. And we're also going to use it for terminations. I'm already at the bouncy thing. I choose not to enter the market. So the 15-minute chart really leads the way. Your 1-minute chart, this is your smaller, faster chart. It's still a minute. Like, I don't know, if you're as old as I am and you try to hold your breath for a minute, that feels like forever. 1 minute is going to define the immediate strength of the market. It's going to use these small triggers. And this is your giant waving red flag that says, don't fight the immediate strength. Areas on a 1-minute chart can be used for entries. So the Q, these are the T3 indicators. These are the indicators that Nexgen created nearly 30 years ago, that we have been teaching people to trade the markets with in a live environment for the last 20 years. So Nexgen Software Services has been around for the better part of 30 years teaching day traders. These are Nexgen Software Services indicators. Nexgen Pro Trader Funding is the funding company that came from that company. And people are using the T3 indicators with a very simple plan to pass evaluations on that funding site. So this is the education room for Nexgen Software Services. But man, I would encourage you, grab a demo, talk to a client advisor, learn the patterns. A lot of people finding success with this. So guys, big chart, little chart. And now let's get into the rules. A trend trade. What is a trend trade? It's just trading with the trend. There's only 3 rules. 2 of them are exactly the same, which is pretty cool. So to define a trend, we're going to let the small triggers on the large chart let us know which way we're looking for rules to be met. And guys, if they're up, we're looking for long trades. If they're down, we're looking for short trades. If they're up, we're looking to buy. If they're down, we're looking to sell. That's the path of least resistance for you guys. If you can't tell, if they are sideways, look like they're moving left to right, not up and down, guys, it's okay to do nothing. It's all right to go, man, I just can't tell. I choose not to trade. It's all right to let it be very, very decisive, very definitive. And that's it. How easy is that? What direction is the trend? Whatever direction the small triggers are going. Let's see how smart you guys are right now. Boom, boom, boom. Let's do gold. Gold typically is screaming right now. Let's go to a large chart on gold and hope for the best on that trigger look. Well, there we go. Guys, what do you think? Are those triggers up or are those triggers down? Give me a U or a D. Let me know that you understand this lesson. They're down, right? How easy is that? So I'm making the decision. I choose to only look for opportunities down. That's it. Pretty simple, right? Now, once you do that, you want to make sure that that big slow chart is not at a termination condition, that it's not trading directly into areas. And pretty simple again. Here's the downtrend. The next thing, the next bouncy thing is way off in the distance right now. I have room to get there. Does that make sense? I have room to get to the thing that could stop the market. That's rule number one. When I define the trend, I say, where's the next bouncy thing? And if there isn't one, rule number one is met. But if it's already there, rule number one is not met. It's almost too simple, right? I have room, there's nothing in the way. I'm already there. Something's in the way. Does that make sense? You guys good? Feeling good? I love it. That's rule number one. I wish I could make it more complicated. But that's your large chart read. The triggers are down. I've got room to trouble. Let's go to the small chart. Let's go make the magic happen, guys. When the large chart read is done, takes you what, 2 seconds, maybe 3 if you blink. We're also going to make sure that that 1 minute area is not trading into, or that 1 minute's not trading directly into areas. Now, with TradingView, you're going to have to know where your entry comes from to be sure that this rule is met. And when I say that, it means that you're going to have to pinpoint where that fight's happening, where you're going to get into the market, so that you can make sure from your entry point, you've got enough room to make money. There's different thoughts on how much room is enough room. I think $200 per contract is an outstanding baseline for new users because the room to the area means that you could have a bounce and you may have to react. And the newer you are, the slower your reaction time is. That's okay. That's normal. You're new. So $200 is a great baseline. My personal is $100 because I'm pretty good at reacting to stuff. So from anywhere you take your entry, you need clear skies. Can you guys give me a Y in the room if you're good with that? From wherever you're going to enter that market, there just simply can't be something in the way. It could be any horizontal line that's bouncy. Guys, trading into trouble is the biggest killer in this room. This is the reason most of you lose trades. So making sure I've got room to get paid. Doesn't mean that it's gonna go there, but it means at least I'm not gonna bounce off of something on my way. So here's my entry, and I've got 1-to-1s right there, and I have to say to myself, no trade. That's not my trade. I'll wait for the next trade. I'll wait for a better trade. I'll wait for a trade that gives me room to make money. You guys feel pretty good about that? I know that there's a lot of pictures going on here. I really think that when you start realizing that every area on a small chart can create a bounce, you're less inclined to take that trade. You're less inclined to enter the market. And I can tell you on this particular trade, I entered with room to the first trouble. Whoops, where'd it go? And trouble created a bounce. And then, I got paid at trouble again because trouble can create a bounce. And then I got paid at trouble again, because trouble can create a bounce. And guys, the goal is to get paid. And if you know that there's something in the way that could stop forward progress, it's okay to get paid. Give yourself permission. So let's define the entry so we know where we're gauging room from. And again, it's just a pattern. We're going to define the trend. On the smaller, faster chart, we're going to wait for a fight. That fight is going to pull back to an area, to a bouncy thing. And then we're going to hope it resumes the trend. So in an uptrend for a long trade, when the large chart is up and there's nothing in the way, your small chart will be off in the distance. And is everybody familiar with the term the fear of missing out? Meaning that while this chart is running up, you're feeling like you're never going to make money. And you're going to want to make investment choices that may not be advantageous. Guys, we're waiting patiently for the small triggers to turn down. When the large chart triggers are up, we want the small chart triggers down. This is the immediate momentum. And once this happens, the fight is on. We're going to look lower for a long trade. We're going to let the market pull back. We're going to let the fight happen. And when it gets to something that can create a bounce, 1-to-1, zone, mid-band, whatever, we're not just going to jump in. What we're going to do is we're going to wait for an up bar, a reversal bar up. And what the market is telling us is, hey, now we're starting to go back in the direction of the large chart. But the key to this methodology, guys, the keys to the kingdom, the golden goose, the magic beans, whatever you want to call it, is make sure that that bar finishes above those small triggers. Get to the trade side of those small triggers. And what it does is it takes you out of the immediate momentum and it puts you right back in the good graces of the large chart. This is where the small chart typically reverses to continue with the large chart. In a short trade, when the small triggers roll, the fight is on. Guys, look at this. This is like 12 minutes before the small chart finally gets to something bouncy. And when it gets there, your entry is a reversal bar down that finishes below the small triggers, on the weak side of the small triggers, on the trade side of the small triggers, because we refuse to fight momentum. And down it goes. That's where the small chart tends to get back in the path of the large chart direction. So now let's kind of piece those two together. The trend is down, and I wait for the fight. The fight is on, and I wait for a pullback to an area, and it gets there, and look at that. I don't get in, and I don't get in. And thank goodness they might have spiked and taken me out. But once there's a down bar below the small triggers, I'm in. And I'm excited about being in because I've got room to make money all the way to that outer band. So it's important that you understand entry. And then when you define where your entry is coming from, you make sure that there's nothing in the way to mess up your good time. In a long trade, the trend is up, much smaller fight, pulls back to the mid-band. I'm waiting for that close above, and when I get it, it's that room to targets. That's what we're looking for. Is everybody good with that? You're probably thinking, man, that can't be it. Guys, that's it. That's all there is to finding this trend trade. Define your trend. Make sure there's nothing in the way. Wait for the fight. And it sounds simple, right? Hardest thing you'll ever do, because traders get bored. This is what it looks like right before it all comes together. Because the small triggers are up, the trend is up. Guys, give me a Y if that makes sense. We're going to go through this piece by piece real quick. I want to make sure nobody gets left behind. Once I define my trend, I make sure there's room to trouble. And since there's nothing in the way, I have room to targets. Rule number 1 is met. Everybody good? Look at that. The market went right to the thing that could create a bounce. And what did it do? It created a bounce. Holy crap. Who would have thought? I love this stuff. All right, so because I'm done with my large chart, my entry rules say buy a pullback at an area with a close above the small triggers. Guys, you got to learn this language. The market is way the fudge up here. My bouncy things are way down here. Guys, I know exactly where my trade needs to come from before the fight even starts. I know exactly where my areas are before the market ever gets there. You will literally call your shots. You will yell at your screen and say, sellers, come on, get me to that area. You know where the bouncy things are. The triggers are up. There's room to targets. The small triggers rolled. Come get me. I know my first entry spot. It doesn't guarantee that the rules are met when it gets there, but I know where it has to get before I even start to look for that close above the small triggers. We did this one in the room. This was pretty cool because the market was all the way down here. And we're like, okay, let's call our shots. If we get the roll of the triggers, where does the market need to return? And we put a box from the bottom of that zone to the midband. We said, this is the zone, this is the range. Now all we have to do is wait for it. And it was 1, 2, 3, 4, 5, 6, 7, 8 minutes until they got there. And it was 9 minutes until they gave us an entry. And then it was 2 minutes until we captured almost 30 points right to trouble. And guys, this right here will be the most stressful thing about trading for you. Hoping they get there, knowing where your advantage is, waiting for that perfect entry. But if you go through, if you study this, if you practice this, you're never going to miss this. The small triggers define the trend as up. There is room to trouble. Because the small triggers roll down, I look for lower areas. Entry signal is an up bar from the area with a close above the small triggers. Does it feel too easy? Did you guys know that I had someone call me once and said, Mark, there is no freaking way 3 rules and 2 charts is enough to be a successful trader? I disagree. The smalls are down. We're on the strong side. We're going to talk about that. That's management. There's room to trouble. Since the small triggers rolled up, I wait for a pullback to the area with the down bar that closes below the small triggers, and I wait for it to close. You'll notice that my entry is on the next bar. I get short 10 contracts. This was a live trade at 55. I take 7 of the 9 off, or 7 of the 10 off, at the thing that can create the bounce, because my job is to get paid. Your trend trade will look the same every time. It will be a trend, it will be a fight, it will be a resumption. Unless you lose, in which case it will be a trend, it will be a fight, it will be a continuation of the fight that takes you out, and that's okay. I'm going to teach you where to put your stops. One more for grins, guys. Triggers are down. Only down. Room to targets. Rule 1 met. Small chart. Room to trouble from my entry. Rule 2 met. And because the small triggers roll up down here, I'm looking higher. And guys, it went through an area of support, never gave me an entry. I didn't have to get run over. And when it hit the next area, sorry, that was resistance. When it hit the next area, don't just jump in. That's silly. Get to the good side of those small triggers. Embrace the idea that this is where the trade originates, and it's okay to get paid at trouble. It's okay to go break even when you hit trouble. And guys, that's it. That's the trend trade. An uptrend means that the buyers are in control. That's it. So when the buyers are in control, I'm not jumping in yet. There's a lot going on, right? There's typically a fight. Your pullback is the sellers fighting. You'll be able to pinpoint the exact number where the sellers failed because the market starts going up. So when you enter your beautiful trend trade, your initial stop placement is where the sellers have failed. That's it. You're saying they tried, they failed, If they can get below that failure point, I don't want to be in this trade. So for a down trade, you're going to use the pivot high, 4 or 5 ticks above it. Give it a little breathing room, right? And if the buyers fight again, you don't know what they're bringing to the table. They may have called friends, right? And who knows how hard they're going to fight the next time. So this is going to help you minimize losses. And you will take losses. Every trade doesn't work. Great trades will fail. Crappy trades will win, guys. So it's all about consistency. There's my pullback to the area. Sellers have fought. There's right where they failed and the buyers took over. That's your entry. Hopefully, for huge profits, your initial stop goes below the failure. Does that make sense, everybody? Stop placement is a big part of what we do, guys. Putting stops in the wrong spot. They know where they are. They have cameras behind you. All right, let's talk about support and resistance. And then I think we're probably done for TradingView. What is that? An entire plan capable of producing more winners than losers in 30 minutes. That's pretty kick-ass if you ask me. Guys, when the market is trending up, any area reached, any horizontal line reached is resistance. Everybody good with that term? It's important because short trades come from resistance. Any area hit in a downtrend is support. This is important because long trades come from areas of support. So you have to know the difference between resistance and support. Resistance breaks and becomes support when a full body of a bar closes above resistance, guys. So as the market is coming up, it's resistance, it's still resistance, hasn't changed from resistance, continues to be resistance, boom. The bar finishes and resistance becomes support. And look at that. Sure enough. So if you get a full bar and you're looking for a short trade, you can't take a short trade from support. Short trades come from resistance. The market's got some work to do. If the market comes back to support and then you get a full bar below, support is now resistance. You can't take a long trade from resistance. And sure enough, it holds and the market continues down. So the full bar will change the role of the area. Can you guys give me a why if that makes sense? And I'm going to show you why this is so important. Because you're all going to be tempted. You're all going to be tempted to take that little peak above resistance and say, this is my long trade. Or that little break below and say, this is my short trade. The market comes down and hits support. No prairie dogs. Amen, Matt. And then they come back and they hit resistance. And they come back and they hit support. And guys, this little peak, this tail, it doesn't change the role. This is the sellers. This is the sellers trying and failing. And this little close above resistance, that's not a full bar. That's the buyers trying, but it's still an area of resistance. This right here we call the prairie dog. I got you, 10K. And the prairie dog kills a lot of trades because you're saying to yourself, oh, it's finally going up. It finally closed above. Now I'm good. But you're not. You're still working with an area of resistance. And then, so 10K, the market comes up. This is 1 minute. This is 1 minute. Because if it's this close on the big chart, right? If you're below it on the big chart, there's no room. And if you're above it on the big chart, there's room to the next trouble. So on the 1 minute, here it comes into resistance. As soon as you get a complete bar, the full minute is done. The bar is over. The next bar has started. If the full body is above that zone, that area, that 1-to-1, that area goes from resistance to support. And if a full body, I don't care how big, how small, gets below that area of support, support becomes resistance, which means that I don't take trades where the head of the bar peaks above resistance. And I don't take short trades when only the tail is starting to work its way through. You've got to let the bar close. Let the bar tell you exactly what it wants to do. Man, I guess down triggers work, huh? Look at that. So let's see if we can find a good example of what it looks like. This is a perfect example. Coming right from the NASDAQ. So the market is coming up and it hits an area of resistance. Guys, does that make sense to everybody? We'll make resistance red. There's my area of resistance. And then a full bar breaks above and closes above that area of resistance. And magically, just like that, resistance becomes support. Is everybody good with that? This will keep you out of a lot of trouble. And it just happened in the NASDAQ. And look at that. Support held. And holy smokes, off it goes. Hits resistance. Resistance breaks. Becomes support. That's what we call a momentum trade. And now if the market pulls back to an area of support, with up triggers, when it gets to that area, it might be just a little bit tight into large chart trouble. And guys, that's TradingView. That's the method. Let's talk management. This is not a complete management plan. What is a subscription that gives you support and resistance bands, the red and green? So I use a company called Chart Prime. Let me get you a link to it. It's a third-party indicator. It has nothing to do with Nexgen. We don't offer support for it. They do. Let me get that out. But they give supply and demand because we haven't been able to get Fibonacci. Programmers can't make it happen the way we want it to. So that's the one that I'm using. And when you do it, don't spend your money on the expensive one. It's $67 a month, but they pull 20% off. I think I pay $50 a month. I just re-upped for the year. It was just under $600, I think. But that's what I'm using. That's what you're looking at. So guys, when you're reading your large chart, this is your large chart read. Direction of the triggers is the direction of the trade. I say these things 100 times because I want them to stick. Once you define the direction, guys, we're gonna set the stage for management, and we're gonna do it. This is just that picture blown up by asking ourselves, where is the current price in relationship to those small triggers that have just defined the trend? And there's only three options: left, center, or right. So in a downtrend, it's either left, center, or right. In an uptrend, it's either left, center, or right. This doesn't change based on up or down. If you are left of the triggers, you're on what we call the strong side of the triggers, which is really where the momentum is the fastest. This is where you have a better chance of the market breaking and creating larger moves. Exhibit A. Doesn't mean I'm going to trade into 1 minute areas because they have to break, because they should break, because they will break. 1 minute areas will still absolutely eat your lunch, even from the strong side, but you may choose to go break even and see if they break. If you're on the right side of the triggers, so in a downtrend, price is above the triggers, right? And in an uptrend, price is below the triggers, the right side of those triggers, that's the weak side. This is what we wait for to enter on the small chart so that we don't fight the immediate momentum. The weak side of the triggers is where reversals tend to happen if they're going to. The weak side of the triggers means that that 1 minute area is more likely to create a bounce. So a lot of you brilliant savants in this room will say, you know what? I'm on the weak side of the triggers. I'm just going to get paid right at that area. I'm not going to hope, wish, want, or pray that it breaks. I'm simply going to take my money and wait for the next trade. Now, if you're in transition, I'm not quite strong, but I'm not really weak. The market's trading right in the middle. This is where the market tends to be more often than it's not. And guys, this is where I am definitely getting paid in an area. My goal is to get paid. And I'm probably reducing all the risk on my trade almost instantly. Because for me, the transition means that it's not my best look, it's not my weakest look. It just kind of is what it is. Partial profits make a lot of sense. So if you go through this every time, the trend is up, I'm on the strong side, now I know how I'm going to manage it. I've got nothing but room to the targets, and then I go look for an entry. So for my new people, for my shushes, for my Lucy's, who else is new in here to this? And you old hats coming from NinjaTrader doing this, give this a go. Every chart where you take a trade, every post that you put in this room, define the small triggers, really reinforce the rule of the trend. Talk about where price is in relationship to those triggers. Start working on your management. This is where money's made. Say out loud, I have room to targets. I have room to make money. Guys, this is your large chart read. It'll take you 2 to 3 seconds with a little bit of study. On your small chart, when you post in the room, use this phrase until entries are easy. Small triggers rolled up, so I need a pull back to an area and then a down bar that closes below the small triggers. Type out everything that has to happen to give you a great entry. And what happens is you start creating this correlation between what your eyes see and what it means to you in terms of rules being met. And then you start calling your shots, guys. And trading isn't, I wonder if this is a trade. Trading is that's exactly where it has to happen. This is exactly what needs to happen. They're going to have to give it to me if I'm going to take the trade. So all annotated charts, do me a favor. So 10K, if you're trying to connect to the eval, it needs to be on demo, not live. Take it off of live, put it on demo. Tell me if that works. Let's start there. Did you catch that? Are you going to try it? Guys, are there any questions about TradingView? You do what you do. Let's go to NinjaTrader, guys. Let's go to the second platform. NinjaTrader's been around a little bit longer. And the approach to learning it is absolutely no different, guys. We're going to learn to read our indicators. We're going to use 3 rules and 2 charts. I'm going to give you a simple plan with a checklist. And guys, I'm going to remind you again, most of your day is not trading. Most of your day is waiting for that edge, for that advantage, for that good stuff. So in the room, I'm dropping your spreadsheet, I'm dropping your plan, I'm dropping all the good stuff. Still the KISS plan, still a stepping stone. Trades in it are still designed to optimize your chances of success. Methodology is no different. Define a trend, wait for the fight, know where that fight is most likely to be lost with your entry rules, hope that the trend resumes. And guys, I'm telling you right now, there's nothing new about what we're teaching you. Define a trend, wait for a fight, use your entry. Guys, this look is from the 2004 trading plan with Nexgen. 2004. That's older than some of the people in this room. It's nothing new. Your ability to wait for the fight will help you find success. So we're going to learn the rules. You're going to post in the room. You're going to keep it simple. And there's only 3. When a rule is true, it creates an advantage. When the advantages come together, you have a trade. Not until. Let it be black and white. You either do or do not. And if you do not, don't go to rule number 2. Not yet. Not in the beginning. It only takes 2 charts. Big chart and a little chart. Large chart, slow. Broad stroke of a brush. Very hard to see change. Your large chart will define the direction of the market. Your large chart will define the momentum in the market. Your large chart will define the areas that could be problematic. Guys, this is a recurring theme. Your small chart is an entry chart. Same thing. It's going to show you the fight. It's going to show you where the fight is most likely to be lost. And in this one bar that defines momentum, direction, and areas, hopefully you see the resumption of the trend. And that's your trend trade. It's the exact same pattern every time, giving you good stuff, giving you the advantage, giving you the edge. We use these two charts because we're not in control. We never have been. All right, so 10K, no worries. Open a ticket, let them fix it. Open a ticket, let them fix it. Because they may have to look at your account. And it's just stuff that I can't do here from the room. Jason or Chris or Cam or John or someone will be on there and get you hooked up as quickly as they possibly can so we can get you trading these great trades. Guys, your large chart is like a large crowd. The men and women that run the market, the one percenters, the man, big business, institutions, they create trends. They create momentum. They react at areas. They're the driving force and they win more than they lose. Your small chart is like a small crowd. They fight. They're ne'er-do-wellers. Word on the street is that they smoke cigarettes by the Walgreens and ask for change. And guys, we're going to pinpoint. No worries, 10K. Sorry I didn't have a better answer for you. It's hard to do tech work in the middle of an education room. But I got someone dedicated to take care of you. The pullback to an area, guys, that's your fight. That's these guys. And when the large crowd is giving you that momentum and the large crowd is handing you that clear path, the small crowd loses like 70 to 80% of the time, which means that the large crowd wins like 70 to 80% of the time, which means that if you're following the methodology that puts you in at their failure because of their advantages, you're taking a trade that you'll be able to prove gives you the potential to win up to 70 to 80% of the time. This one's for Ron. Your large chart is the apex predator. You can't fight this thing. We're like remoras. We let them do all the work. We let them take the risk. We let them go after the 300-pound tuna. We get just enough to make sure that our goals are met from all of their hard work. Ninja Trader uses areas, horizontal lines that are bouncy. Divergence highs and lows, still a loss of momentum. Fibonacci resistance, Fibonacci support, yellow 1-to-1s. In an uptrend, any line reached is an area of resistance. In a downtrend, any line reached is an area of support. It's a blanket term. Areas are bouncy. That doesn't change. We're also going to use trigger lines. Trigger lines show up in everything you do, guys. We're learning to read trigger lines if we're being completely honest. There are small triggers. The two solid lines work together, creating a small trigger. There are the large triggers. I mean, they're bigger, but they're dashed just in case proportion isn't your thing. And when they're green, they're up, and when they're red, they're down. Trigger lines will be used to define the first advantage that we look for, the advantage of momentum. Trigger lines will be compared to those bouncy areas to let us know if that area has the potential to stop the market. And triggers, the large specifically, are going to show you exactly where your amazing entry is coming from. Triggers show up in everything. All you need to know is that these are small and that these are large. So now we're going to break it down. There's an educational method called chunking. And what chunking means is that instead of trying to get to the finish line, you break down what it takes to get to the finish line in parts and then put them together. So we're going to take rule number 1, strong triggers. As you learn it, here's like 60 pictures of what it looks like. We're going to couple those strong triggers with a clear path, no termination conditions in the way, and then we're going to define an entry. And guys, because it's so important to know when your rules are met, it is equally as important to know when your rules are not met, which means that you're going to learn about weak triggers so that you can always identify strong. And you're going to learn about termination conditions so that you can be sure you have a clear path. And you're going to have to know when not to enter when the rules aren't met. And we're going to do it with 3 simple rules. And we're going to start on the first right now. Rule number 1 says strong triggers. The large chart, the big chart, the slow chart, the large crowd, the shark needs strong triggers. And strong triggers either are or are not. Trend is defined by the background color. So if the background behind the first bar is green, you're in an uptrend. If it's red, you're in a downtrend. In order to have strong triggers up or down, the colors all have to match. Everything is green, everything is red. If there's a discrepancy between background and triggers or triggers with one another, rule number 1 is not met. Rule number 1 is an easy phrase. Separation is strength. So in an uptrend, when the small triggers break above the large triggers, when the large triggers are wide, and you see daylight between the two, looks like scissors that are open, you have strong triggers. And in a downtrend, when the colors match, when there's separation, everything's pointing down, you have strong triggers. And when you have strong triggers, the advantage of momentum lets you know that the odds are favorable for that market to continue in the direction of the trend. Strong triggers is one look. If there is separation, you have strength. Whether it's a tiny little bit of separation or whether it's a whole bunch of separation. We don't rate it. We don't say, oh, that's better separation than this. If you have separation, you have strength, which makes it almost too easy. If you don't have separation, you have weakness. And if you have weakness, my friends, anything can happen up or down. Strong triggers are what we look to break areas, right? Whoa, where did that go? Did I just close that chart out? Son of a gun, I did. Hold on. Here I go messing stuff up, right? Oh man, I messed both of these up. All right, we're going to come back to it in a second. Strong triggers will push a trend. Strong triggers can break areas. Strong triggers will cover mistakes, guys. Weak triggers, you get big ugly reversals from the middle of nowhere. Key Fibonacci areas are more likely to hold. Is everybody okay with this? There either is separation or there is none. Rule number 1 is met. I can go to rule number 2, or I sit on my hands waiting for rule number 1. Those are your options if you're following the KISS plan. Once you have strength, once you do have momentum, once that market is hard to stop, you're going to make sure that there's nothing in the way to stop it. A termination condition, an area that could stop or reverse the market. And guys, areas that can stop the market are just horizontal lines on a big chart. It doesn't matter if it's a Fibonacci resistance or support. It can be yellow 1-to-1s. It can be divergence highs or lows. When price gets to one of those areas, the large crowd is going to make decisions. And there's 3 different decisions that the large crowd can make, and they don't send out a memo, guys. They're either going to break that area, whoops, wrong one, and just decimate it, keep going up. Sometimes the buyers and the sellers get into a little bit of a fisticuffs and they jockey for position and one of them tries to take over and the other tries to take over, and there's this like 2 pit bulls over a T-bone that you don't want to be a part of. Or that market could reverse completely. And guys, if a termination condition, price reaches an area, no triggers go through, if that reverses the market, we actually call that a strong top or bottom, which is the precursor to the best of the best. And actually rule number 1 for the second trade on the plan. So to define a termination condition, we must first let the large crowd get there. Price reaches the area. Dynamic Renko bars come up, hit an area of resistance. Dynamic Renko bars come down, hit an area of support. Once price reaches the area, we abandon price. Price bars no longer matter. Your trigger lines will tell you everything that you need to know. And if 0 triggers get above that area of resistance, that area of resistance is defined as a termination condition. If price reaches an area of support and none of the triggers break through support, that area is defined as a termination condition. It could stop the market. So rule number 2, in all of its wisdom, says that if you have a termination condition, absolutely no trades into that area. We don't initiate a long trade off of the bounce. We don't jump in hoping that it breaks. We simply sit on our hands and do nothing for a minute. Embrace that 90% and say to ourselves, I'm okay doing absolutely nothing, because when price reaches an area and the triggers don't break it, that area is more likely to produce a loser than I am to get a winner, which means that my advantage is gone. I don't have an edge. Does that make sense, guys? Andy, do you want your critique right now? So the triggers are up. You're on the strong side of the triggers, and you just jump in and you jump out, right? Absolutely no fight, no pullback to an HVA because the HVA wasn't even formed yet. You just said everything is screaming up. I'm going to scream up with it and see if I can't pull some money out of the market. Does that make sense? This is a trading view chili dog. All it is momentum and path. Jump in and hope for the best. And man, you got the best, because when everything is screaming the same direction, dude, it's hard. It's hard to stop that market. So guys, price reaches, no triggers, no trade. That's your phrase. Price reaches, no triggers, no trade. Learn it, live it, recite it, write it on every chart. But areas break, guys. Areas break all the time, usually with momentum. So what we're going to do is we're going to learn how to count triggers. Can everybody count to 4? That's as high as you need to go. Some of us have to take off the other shoe, but that's okay. Careful mowing the lawn, guys. If price reaches a line, count triggers. And if the answer is 0, 0 triggers have made it through that line, that's a termination condition. Sit on your hands, do nothing, wait for the reaction. If it's really going to break, the small triggers will begin to tell you, and they will smash through the area. And when the small triggers, 2 of the 4 trigger lines, get above the area, you're still sitting on your hands as a brand new user. It does have the potential to break, but it's a pretty weak potential. Not the best look. I would go so far as to say kind of a crappy little look. But when 3 of the 4 get above that area, now we got some potential. Now that breakout is a little more imminent with all that momentum. I have a better shot at taking what we call a medium probability trend trade. That is the second trade on the plan that you have that allows you to capitalize on the potential to break. It requires 3 of the 4 triggers through. It has different requirements for entry because it's not a clear path yet. It's only potential. I had that in high school, failed miserably with it. It's not until 4 trigger lines get above that area that the area is considered broken, that the path is now considered clear, that with all that momentum and a clear path, you're going to go look for an entry. This is the best of the best. This is the highest probability. This is what sets you up for the best trade, highest probability trade Nexgen teaches. If you don't understand the difference between a termination condition and a clear path, you're going to struggle with trades in the middle. You're going to struggle with what we call a 50-50 trade. If you know the difference between the two, you'll always know what you're getting into with rule number 2. Is everybody good with that? If price reaches an area and none of the triggers break, no trades. If 4 triggers get above an area, it's okay to look for trades. The path is clear. Your path remains clear until you hit the next line, and then you start right back at number 1. That's a clear path from a breakout. This is a clear path from a reversal. Price reached. Reversed the market completely. Gave momentum. Clear path. Guys, this is rules 1 and 2 met too. Same way it is here. So 2 ways to end up there. And the easiest trades that you will ever take with this software will have momentum and path. Momentum and path. And you're going to use that smaller, faster chart to buy or sell at an area inside of those large triggers. But if you don't understand momentum, if you try to go long without it, right? If you don't understand path, if you try to go short into an area, you're more likely to lose than win. There is no edge. But when you have momentum and path, oh my goodness, guys. This is where great things happen. Here you go, Pete. This is momentum and path. It's 20,000 horsepower and 50 miles to the mountains, guys. It is hard to stop. But there's always that Yahoo that creates a fight. They got a lot of money. So the same way the language helps you identify the rules being met, separation is strength for rule number 1, price reaches, no triggers, no trade for rule number 2. The language for rule number 3 is so freaking awesome. You will wait for the market to come to you. You will know exactly where your entry comes from. You will know exactly why the entry is coming from that spot. And guys, if you learn this phrase, it takes all the stress out of entry. You're going to use a limit order, which means you wait for the market to come to you. You don't chase. You're going to buy or sell a pullback, that fight created by the small crowd. You're going to do it at an area because areas are bouncy. Your list is Fibonacci support or resistance. Yellow 1-to-1s are a midband. But those areas have got to be inside of large triggers because large triggers will define where the retracement is most likely to occur. Large triggers will show you exactly where your areas need to be. And your entry is nothing more than a pattern. If you guys remember, the whole idea of the methodology is trend, fight, trend. That's it. We're pinpointing where the fight is most likely to be lost. And it's repeatable, it's testable, it's provable. And if you're honestly taking a trend trade, they're all going to look pretty much the same. And when the large chart is up and it's running without you and there's nothing in the way and you're terrified that you're never going to make any money, and frankly, you're a little mad at me, the pattern begins. And it begins with a reversal bar. And a reversal bar says, hey, the fight is on. The reversal bar is not your entry. It's just the beginning of the fight. When that reversal bar prints, you can say in all of your wisdom, the market may retrace somewhere between the top of these triggers and the bottom of these triggers. And now I've defined my retracement zone. But trigger lines are not bouncy. Areas are bouncy. So the third part of the phrase is that we're going to use an area. Fibs midbands are yellow 1-to-1s in the retracement zone. And these areas are where the small crowd is likely to lose, where the small chart is likely to bounce back in the direction of the large chart advantages. Now, sometimes there's multiple areas. There's a high one and a low one. Sometimes there's 8. Who knows, right? Anything bouncy inside of triggers is fair game for an entry. Because the large chart has odds favorable momentum, because the large chart has absolutely nothing in the way to create a bounce, the KISS plan rules are designed to keep you guys from missing trades. Your limit order will go above the highest point of support inside of triggers because with all of this steam to the upside, I don't want to trip over a couple pennies trying to save a few dollars. And what you've done by defining where the market is most likely to continue, as you have defined exactly where your edge is gone, where the rules are no longer in play, where the advantage is no longer supporting you. So if the small crowd has it in them, maybe they ate their Wheaties, right? And they retrace and you enter the market at the highest point of support, you feel good. This is the highest probability trend trade Nexgen teaches. And if they push a little lower, you refuse to panic because you're still in the retracement zone and there's still another area that may create a bounce. And if you get below that second area, you might be getting a little nervous. Remind yourself that you are still at the point where the market has the potential to retrace. But if you get 5 ticks beyond those triggers, you're going to be waiting with a protective stop. And you're going to be saying to yourself, okay, game over. Where's that trade that we took yesterday in the room? We took a live trade in the room yesterday. And the idea of where the market should not go kept us in the trade and allowed us to make money. And let me see if I can find that picture. I should have kept it. It was pretty cool when the market does exactly what the education says it's most likely to do, and it does it live in front of you. And I can't seem to find it right now. That's not it. All right, I'll find it some point. So reversal bar begins the pullback. Triggers define the retracement zone. Areas inside the triggers define the bounce. If they get 5 ticks beyond all the good stuff, you will cut ties with that trade. You will say, I no longer want to be in that trade. There are no entries in the KISS plan taken from the wrong side of the triggers, because once you get to that point, you don't know if, when, or where that market may continue up. The advantage is gone. It's no longer present. You don't want to be in that trade because you no longer have an edge. My friend Jen believes in that. With momentum and a clear path, she recognized that there were no areas inside of those triggers, and you'll notice that she didn't take a trade, didn't get run over. Jen, I love this picture. And this is such a great example of how it takes all three to come together to produce the perfect trade. So in that downtrend, when the momentum is strong, when the path is clear, when the reversal bar happens, you know where the retracement is most likely to go. You know where the market is most likely to bounce. It's where the market is most likely to continue in the direction of the large chart. And you know where the market shouldn't go if this is going to be part of that 70 to 80%. Initial stops are placed where the market shouldn't go. Now here's the kick in the nuts that nobody likes. That's a technical term, guys. I didn't make that up. Anything that wins 70 to 80% of the time. Where is my picture? Anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. So you will never know if your trade will win or lose. It's all process, not results driven. And guys, this is what's important. Anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. So we focus on the process. Focus on the execution. Let probabilities work itself out. And you can go back and study this without ever taking a trade. If you open up your large chart and you see the rules met for a trade, you see odds favorable momentum. Let's see if we can find one. And you see a clear path, and that looks like one right there from about 3:20 in the morning. Circle the tail. I didn't take a trade, I just circled a tail. And then I open up my small chart and I scroll back to that exact same point and I look at that circle on my chart and I ask myself, did the market pull back to an area inside of that retracement zone? Does everybody see how it did, in fact, pull back to that area inside of the retracement zone? And the next one with the potential to break pulled back to that area inside of the retracement zone, never got where the market shouldn't go. And then the next one did it. And then ultimately, it works its way up. So guys, it's just a pattern. You can use that concept of momentum path, define your entry. This is your pattern. This is your high probability trend trade pattern. And that's my first hour. I got one more. When you present in the room, this is what I ask of you, because we're about to get to this point, the presentation part of it, where you guys say, hey, Mark, this is what I did. How did I do? Talk about your momentum. Talk about your path. Talk about your entry. Use the language of the rules as you're learning so that you can create a visual that creates a neurological connection so your brain knows exactly what that visual means to you. If you do this, if you're this thorough, Doesn't have to be a dissertation, but if you do this for the first couple weeks, guys, you're not going to make mistakes. You're going to know whether or not you have momentum or if it was weakness. You're going to know whether or not it was a clear path or if it was only the potential. And you're going to know if there was an area inside of triggers or if it was on the wrong side or maybe not there. And what you're doing is you're reinforcing the lessons. You're creating repetition. I don't have separation. There is no strength. 4 triggers aren't through the area. I don't have a clear path. This is a prime example of in the moment. The first bar lets me know, sit on your hands, Novak. You're missing 2 out of 3 of your advantages. Does that make sense, everybody? And then once you get this very core concept down, every trade you take, I promise you, will go back to these 3 things. Momentum, path, and entry. Every trade uses them in some fashion. Every trade. So when you have all 3, it's perfect. When 1 is missing, it's pretty good. Let's manage it. When 2 are missing, you're like, don't want to do this. Guys, you're in control. Nobody can make you enter. Nobody can make you exit. Nobody can do anything other than, take care, Andy. Go get some rest, brother. But when you know what's good and bad, when you know what's working for you and against you, it's going to help you. You're going to say, I don't want to enter on a low probability trade. Or you may say, I love this medium probability look, but I'm going to manage assertively because one of my advantages is gone. You might even say, this is perfect. Can't wait to take that trade. So always speak out loud. Your pets should be learning how to trade too. And what happens is you don't get caught in the fights, guys. You don't get caught in the nonsense. You don't get flim-flammed or speckledorfed or any of those things that upset the apple cart. Keep it simple. Keep it focused. And eventually, should you decide, you'll see more. You'll do more. Question on the entry. A close above the 8-3 triggers is fine, but do the triggers have to be cyan for a long or white for a short? Or we say the close is confirmed for entry. And 10K, you're talking about TradingView, yes? It's really pretty simple. There's no reference to color. So for a short trade, and this is cool, we can look at it both ways. For a short trade, it's a close below the triggers. For a long trade, it's a close above. Chances are the triggers are always going to be against you when you get that close. It's rare that they're already in the direction of your trade. Does that make sense? The close is confirmed when the bar finishes. So you'll literally watch the timer. It's pretty cool. I don't even know where we're trading. Let me get back to where we're trading. Here we go. Well, and that was almost a trend trade. But see how I've got 55 seconds on this bar? So for this particular bar, if I was looking for a long trade, probably wasn't because it's not from an area. I'm watching this timer and I'm just waiting and I'm saying, okay, if I get a close above the triggers from an area, and you guys notice that this isn't an area? It's an HVA line. It's not an entry area. You'll use the countdown 10K, and when it hits 0 and your rules are met, you'll just mash that buy button and say, whoo, here we go. So we've already reached the area up top, but look at the triggers. The triggers are up. There's room back to trouble. Here's my pullback. This midband's my area, right? Because the small triggers roll, I need a pullback to an area. When I reach the area, I need a close above the small triggers. So you're literally just waiting for it to reach that area, and then nothing else matters until it does. And when it reaches that area, if it reaches that area, then you're looking for the close above. And yeah, it's just buy market right now. Boom, go cat go. That's your entry. Does that make sense, 10K? That's a good visual of what it looks like before it happens. It doesn't mean that it's going to get there. Doesn't mean that you're ever going to get a trade, but you know exactly what the rules say. And if I get an entry from the area with a close above, I got to make sure I have room to get to this thing above me that could create a bounce. Is everybody good with that? That's kind of a live version of what it looks like. Is the midband the area? No, so you can use a midband. You could use one-to-ones. Do I have any one-to-ones? There we go. You could use one-to-ones. You could use a midband, or you could use the zones. Just an area. Cool. Good questions. Good questions. And we'll come revisit this and see if they gave it. You're welcome. Keep them coming, man. Were you able to get hooked in? Or connected, I guess is the word. Did they get you taken care of on that? We got the best tech team in the world here. You'll wait for Trade of 8? Did you put in a ticket with them? Is it a data issue, maybe? I don't know. Well, I'll be rooting for you. I'm surprised that they couldn't get you. All right, guys, I'm going to take a few minutes. When I come back, right on. Oh, you haven't talked to tech yet. Guys, I'm telling you, our tech department has seen every problem 100 times, and most things they can fix almost instantly. Things that aren't obvious to us, jump off the page at them. They're amazing. I'll be back in about 5 minutes, guys. When I come back, you guys, we'll leave this on. We'll see if the rules get met for a trade, and we'll start looking at all of this stuff. Man, 10K, go ahead and put that tech ticket in. Trading's important to you guys, right? Get it fixed as quick as possible. Our guys are geniuses. Genius-I suppose. I'll be back in 5, guys. Go stretch your legs. Man, Ron, I knew that was coming. What can I say, guys? I like hanging out. Guys, does anyone find it surprising at all that they made the area? And when they got to the area, the bar closed above the triggers. And when the bar closed above the triggers, it went straight to trouble. Pretty cool, right? So from 300 to 312 is $240 per contract. Did anybody take this trade? If you miss this trade, you have to ask yourself, why? Why did I miss the trade? Why did I not take the trade? Why am I not making money when the pattern is true? Guys, this is a trust issue, and it's okay. You're not going to have trust in the beginning, but you need to go back and you need to write rules. If you miss a trade that fits the rules, you need to go back and reinforce the rules. So let's go through it. Were the triggers up or down? Help me with this, guys. Trend is up or down? What do you think? Large chart. Whoops, I got to go kill an alarm real quick. Guys, give me a Y if you can hear me, please. Nobody? No sound in room? Yes? Okay, cool. So the triggers are up. That's my first rule, right? Define the trend. I've got room to trouble. That's the second one. Pull back. Hold on. Let's write it out. Because smalls rolled down, I wait for a lower area and up bar from that area that closes above small triggers. So my rules never change. My rules are consistent. My rules are either met or they're not. So does everybody see that that bar is the bar that hit the midband? That bar is the bar that closed above. That bar is the bar that sent the market to the next area. That's your trend trade, guys. That's your methodology right there. And it hasn't stopped yet. Pretty cool, right? I think it's amazing. So Victor, your chart doesn't look like mine. You don't have areas or an HVA line. I don't have an HVA line. Oh, way up here I do. You don't have a midband? Okay. Well, then you should definitely be in this trade, right? Pull back to a midband with a close above and not a damn thing in the way. Your trade's better than mine. Here's a link to mine. Maybe that'll get you back where you need to be. You could also hit F5. But guys, that's everything that we just talked about. Shush. Does it make sense? And look at where we called our shot, guys. This is the same picture like from the PowerPoint, where we had a box that looks back in history and it goes exactly to where we drew that box. I don't know. I think that's pretty outstanding. It might just be me. What is that? Holy wow. Oh, that's just a picture. That's just me. All right, I'm going to start clicking on your pictures, guys. I can't make this stuff up. It happens every day. Every day these patterns repeat. Every day the rules seem to be met. Every day you can put yourself in a position to win more than you lose by having an edge. By simply trading a pattern that you can prove wins more than it doesn't, and then committing to only taking that pattern. All right, scrolling through. Not a lot of pictures this morning. Is the market not giving it up? You guys just completely enthralled with my voice and you can't focus on trading? I get that. All right, Nathan. Love this. You guys want to get to where you want to be? Do what Nathan did. Flood my room with pictures. Ask a million questions. I promise you, you'll get all the answers. Pete. All right, that's it. Here we go. All right, Miss Jen. Triggers are up. Strong side. Pulls back to the area. Closes above. Doesn't work. Price pulls back. Gets stopped out. So Jen, you're right in that weird spot where if this bar finishes down, these triggers never go up. And if this bar finishes up, these triggers support the long. You got the pullback, you got the close, the stop makes sense. Just didn't work. And man, that's just a part of it sometimes. And then now, momentum trade. And do you see what I mean? If it goes down, they're down. The same ones that you called up just a moment ago. So guys, this is that time. This is that time right there where you're like, it could go up, it could go down. Hell, I don't know. You don't have to guess. It's okay to do nothing. But Jen, when it didn't go up and it gave you momentum down, you took the perfect momentum trade and probably got most of it back. So good job on that. Way to keep your head in the game and not give up. And then this is the one that we talked about. Rule number 3. That little focus. Hey, I do have momentum. My path is strong. The path is clear. But I can't define an entry because all of my areas are on the wrong side of the triggers. And Jen, avoidable loser. Great job. And look at that. And it just kept going. Rule number 3 for the win. Now, guys, one of the things you're going to be tempted to do is you're going to say it's almost inside of those triggers. The area is not inside, but it should, but it will, but it has to. Guys, once the rules aren't there, the edge is gone. And the edge is gone. Wish in one hand, poop in the other. Tell me which one fills up first. And when you understand momentum, you latch onto momentum. And when the potential to break is there, Pete says, let me get below bouncy stuff. I'll jump the fudge in and I'll get paid because it's just momentum. Your dad always said that. That's my father-in-law, Michelle. He used to tell me that. Nobody cares about your butt. All right. So here's your day. Looks like you're making money. Maybe following rules. So Victor's following rules and he's 8 for 8. Victor, do you want to know the absolute truth? The 100%? I have no hesitation in my heart to share this with you. Historically, over the last 4 months, when all you do is take trend trades, you seem to win and fund accounts instantly. And then you deviate from trend trades and you give those accounts up. So this is your little Jiminy Cricket voice in the night. Victor, you have a recipe for success. And until you trust that recipe, you're gonna deviate. But great job, dude. 8 for 8. 8 for 8. I love it. Triggers are up. Trend is up. It's in transition. There's room to areas. I've had issues on my system all morning. That's no fun. Price pulls back, closes above. You take the entry, and you make some money. Trend trades. 10 for 10 now. 15's up. It's on the weak side. It's a clear path. Price pulls back to the mid band. Opens above. Almost gets there, Paul. Son of a gun. Failed trend trade. 130. Good job. You lost 4 ticks. That's okay. Lost 4 ticks. That was the right trade, brother. Sometimes they don't go. And sometimes they do. Exact same pattern. Make 450, lose 130. That's trading, ladies and gentlemen. Management. Pull back to the area, close above, giddy up to the good stuff. Great trade, Paul. Shush, if the pullback reversal bar is not above the triggers and it took 3 or 4 bars to go above the triggers, going long increases the risk. You have some juice in the box to target. What are my thoughts? My thoughts are this. And this is my 2 cents on it. And my 2 cents is no more than what it is. It's just 2 cents and it's an opinion. And I'm not even going to look at rules for the trade. What I'm going to do is I'm going to say if my stop needs to be here and I don't take my entry until here, there's too many moves in the market. There's too much money to be made. There's too many opportunities. There's too many fights, pullbacks, closes above triggers. That shush, I have gotten to a place in my life where there is a calmness in my heart that says you don't have to chase trades. You don't have to fudge your rules. You don't have to jump in and hope for the best. There's just too much good stuff that happens. And there's too much opportunity in markets that trade billions. And the methodology is too solid. I don't have to chase trades. I don't have to break my rules. I don't have to have enormous risk. That's my 2 cents. Everybody's different though. The way I see it may not be the way you see it. But here's the cool thing, Shush. I love saying your name. Still has some juice in the box, right? So if you have the perfect trend trade that originates somewhere down here, and everything says that market is more likely to hit that line, right? Everything is good, perfect. Shush, can you jump in and try to hit that line? Of course you can. And if that's kind of your thing, if that's what you want to do, talk to me. I probably know a pattern that's helpful. One of them is see how the market's already started up? The buyers have gotten back in control. Let me know that you see that. Like the trade's going, the buyers are in control, right? You're like, yes. And then the sellers go, F you buyers, we want it to go down. And the buyers say, no, jerkface, we want it to go back up. So one of the cool things is if you don't get your perfect entry, you can wait for that little fight and failure, that down up. As long as you have those strong triggers, that little down up, what it does is it gives you some place to put your stop. Does that make sense? So what it is it's a pattern within the pattern. And I'm telling you, what's in my head and what you guys receive is like fractional for what you're going to begin to see with more time in the market. So that is one of the ways. If I've got 50 points until I hit something solid and everything looks good, I'll use a little pattern because the pattern lets me put a stop someplace. I can identify a failure. I can identify continuation. And that little pivot gives me a great shot. And check it out. If you don't get that up bar, you don't ever jump in hoping. Good question. Great question. All right, here comes the Nathan show. I love it. Yeah, for sure. So Shush, one of the great things is that the rules are designed to just kind of give you the best, right? Who was this? Was this Paul? 3 divergence means manage close or do not enter at all. I missed that one. 3 divergences is a termination condition. Awesome. So weak top, flat triggers, not momentum. Okay, so Nathan, I like it. Flat triggers on the large chart, and on your big triggers is not momentum. When we talk about momentum, smalls are above the large. That's my only requirement. Same color, but large or widening. That's what we're looking for. So you did have momentum. And you did have a pullback to an area. And it might have gotten you. And honestly, your pullback, see how it started directly from a fib? So that was a termination condition. And then the fib stopped printing. And I'm not sure that it stopped before you would have been in that market. Does that make sense? So your rules-based entry would have been directly into a termination condition. You didn't know it was going away. Right on. So it kept you out of it. But yeah, it's the large chart wide is what we're looking for. Yes, sir. Odds favorable, clear path, perfect read, perfect entry, jerks gotcha. Nathan, this is 100% perfect. Everything about it fits the rules. Everything about it has the advantage. Everything about it is per the language 100%. The only thing that didn't happen is they didn't give you a winner. It's a cost of doing business. What a great look. I would lose that trade with you gleefully. And they did it again, right? And now we're starting to see a market that doesn't seem to want to do what it wants to do. So triggers are up. 4 triggers through. Perfect entry again. Stop makes sense. These guys are being assholes. That's all it is. It's hard though, right? When you take 2 in a row and you're like, son of a gun. And what you're seeing right here is a market that is starting to consolidate where they can't break here, they can't break here, they're coming back up here. And you don't see it until it's 2 or 3, right? You don't see it until it's 2 or 3. So if you take the perfect trade twice, Nathan, and it's in the same range, it's okay to let it break out of that range. Does that make sense? Can you identify that? Perfect trade, perfect trade. And that's not a rule. It's not a nuance. It's not a gray area. It's nothing more than saying, I recognize that these guys can't go anywhere. Maybe I'll just wait until they can. But if you're on simulator and you're following the plan, take every trade that fits the rules. We'll analyze them. 4 triggers through. Perfect entry. Reversal bar prints. Could have gone a little bit tighter on the stop. And again, it just didn't work, did it? And that's that President's Day. See it now? Snaking. I remember that on President's Day. That was some garbage. And if I'm not mistaken, the market was about to end. So guys, when you're building your trust in a plan, Nathan, replaying a holiday is the worst way in the world to do it. Because the market doesn't flow, right? Everybody that's good at this is on their boats. Everybody that's great at this is at their winter cabin and they're skiing, their chalet. Weak top, odds favorable. Mid-band's not behaving as a termination condition. You get your first entry, and then when it hits that mid-band, look at the big old bounce, right? Break even on the second. Nicely done. Nicely done. Because Nathan, no, I'm not going to say it. Great job. Pull back to the area inside of triggers. You're in 2 ticks below. Stop where the market shouldn't go. You get paid. You get out. Do $100 4 times a day. Tell me how your life turns out. 3 out of 4. Divergence. I love it. Perfect, Nathan. And then the second lower too, right? Good job. You know what you're doing. Oh, and that's the one. Perfect. 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 Break even on the second? Oh, so you got paid on the reversal bar? And those jerks came back and got you break even. Sons of bumpuses. That's all right, though. It's perfect, right? It's the perfect trade. And you will create a management plan outside of the KISS plan one day. And Nathan, one day, not Nathan, because Nathan's only KISS plan, but the rest of you, when you see momentum and path, there is no way on God's green earth you will put a stop at an area inside of triggers. I'm telling you this right now from experience. When you have momentum and path, wild horses could not drag your stop to an area inside of triggers. And you'll say to yourself, you know what? If it's the perfect trade, I'll keep my stop where the market shouldn't go. But until you have the repetition, the trust, the time, all of that good stuff, Nathan, your execution is flawless. And that's what we're looking for. The ability to follow a plan without emotion. Odds favorable, 4 triggers, perfect entry. Oh, missed it. And having trouble keeping up with the midband. Have you ever thrown a football to someone running as fast as they can away from you, and you have to throw it a little bit ahead of them? Or, yeah, same thing. Same idea with a midband. You ever gone dove hunting? You have to lead the dove. So if you know that it's coming down, you got to lead it. That's just an acquired skill. But perfect trade, right? Perfect trade. And it's a strong top. Termination that reverses the market. Great job. Odds favorable. 4 triggers. Perfect entry. Oh, it crashed. Probably would have made 100 and then break even, right? It looks to me like you're making something out of nothing over and over by taking great entries. Nathan, good job, brother. Keeping it simple, man. The hardest thing to do, keeping it simple, the hardest thing to do is not talking yourself into stuff that doesn't fit your plan. Great job on that. Strong top, triggers rolled, potential to break. And look at Pete. I'm going to thread the needle below the thing that can be bouncy, and it was, and out at the thing that can be bouncy. And guys, there's so much opportunity in this market when you really latch on to the very basic core ideas. When you understand momentum, when you know that with this push it's more likely to hit that blue fib, Pete just finds a way. And does it again. Momentum, room to trouble, jump in with all the momentum, half off at 10, get out at the target. Great job, Pete. Nice stuff. So for those of you that are new with me here, you're starting to see a lot of different ways to do things. You're seeing people that take trend trades. You're seeing people that are finding opportunity outside of the trend trades. But the one thing that I really want you to notice, ninja traders will see it more, is that everything seems to go back to momentum and path. Everything seems to go back to having a market that's difficult to stop. Everything seems to go back to being able to say there's nothing in the way to create a bounce. Let's see what we're doing here. Is it just 2, Miss Lucy? I think so. And then Jen. And I love that the ladies are coming in and showing you guys how to get things done. One from L. He says fail. We'll see. We'll go look at it. All right, here we go. Satellite radio. This was a bit dodgy. I love it when that's the first thing that you write on your chart. Triggers are up. Room to trouble. Just jump the fudge in. Just jump the fudge in. That's it. And then get out. And then you jump the fudge in again. Oh, you went short? Oh, from here. So you're in and out. Let's make a little money. Everything is screaming up. Jen, that's your right. And then when a termination is reached, when a white bar prints, when the next bar opens below it, Jen, you take the short and take quick profits. Can't go long anymore. Jen found a pattern to go short. Guys, this is a great way to drain accounts. When it works, it looks amazing. When it doesn't, it looks ridiculous. Jen, I love this trade though because the pattern is perfect. The termination is perfect. The triggers are not, and that's probably why it went up further. Oh, cool. But does that make sense? The triggers aren't ideal because the smalls aren't below, and that's one of the rules. And that's probably why it went up. That's where the dodgy comes in. So when you do it, when you write this as dodgy, write why. Reinforce how you went outside of your rules, and you'll be more focused on making sure that they're true next time. Great job, though. Just taking advantage of things. 15 up, weak side, pulls back to the mid-band, closes above. Paul, that's what I'm talking about. You get paid, and then you go break even because you're paid, and they came back and tapped you. Paul, this is perfect. And then hold on, not the first close above, right? Because it hadn't reached an area yet, Paul. This is the most important lesson on the trend trade. Pull back to an area. Do you notice, Paul, that it didn't go back up and run until it hit that mid-band? Not rules-based. Not rules-based. Rules-based, giddy up, baby. Here we go. Pull back to an area. This is where the complete language really begins to come together for you guys. My rules say if the small triggers roll, I pull back to an area and then a close above. And they're in that order for a very specific reason. Great trade, Paul. And good lesson. Could I have put my exit here? All right, so Miss Lucy, triggers are up. You can put your exit anywhere you want. How's that for full do whatever you want? You're like a teenager with a 6-pack of Bartles and James and a pack of Marlboro Reds. Do whatever you want. So pull back to the area, close above. I'm going to answer this with a lesson on terminations. Lucy, are you here? Do you remember this magical phrase? Lines are bouncy. Could you take an exit at a bouncy spot? We're using those for targets. I think that is an absolutely brilliant spot to get paid because that outer band could send that market rifling down. This outer band could send that market rifling down. I think your exit is brilliant because what you're saying is, Mark, I'm in this to get paid. I'm going to put my stop where the sellers failed, and I'm going to exit where decisions might be made. And Lucy, I can't find anything wrong with this trade or the exit. Great job. And there's your entry again, and you're gauging your room. Beautiful. We put these backwards though, right? Hey, Mark, check it out. It's up. There's room. There's my pullback. There's my entry. I had room to trouble. And I don't know if you know this. I'm kind of kick-ass. Look how I did that. Children will sing songs about you, Lucy. All right, weak side, room to trouble, pulls back to the area, and that's a momentum trade, right? Strong triggers, pulls back to the area that is now support, and Jen, just rock star entry. Nope, I take that back. 27 was your entry. So you're 100 points off or $100 off. But guys, this is your momentum trade. It's only momentum. Get paid. Good job, Jen. All right. Fib not reached, clear path. There you go. So strong triggers, room to the fib, and that's your entry. And Nathan, you fit it perfect. And I'm not going to try to confuse you with anything. Perfect. It didn't touch it. Odds favorable, 4 triggers. Yeah, didn't quite get there, huh? Trying to stay calm. You can't control the market, man. They'll get you when it's your time. They know you're there and they love you. The market sits around and drinks tea and talks about what a big deal you are. They'll come get you when it's right. Don't worry. Good job. Setting this stop but was never reached. 4 triggers above breakout entry. Who am I looking at here? Help me out, guys. Whose chart is this? This is L. All right, L, let's do it real quick. So 4 triggers above is not an entry. This is some great lessons on this one, man. Yeah, no worries. So check it out. Everything's going up, right? Rule number 1 is absolutely met down here. But L, we're talking about up here, aren't we? So right here, this is the girl that I dated in 7th grade, right? She was pretty and she smelled nice and all my friends were jealous. She has nothing to do with the woman I'm married to now. So just because it's strong down here doesn't mean that it's strong up there. Does that make sense? This is an important part because we love to look back, right? Bruce Springsteen sang about glory days. So right here is rule number 1 met. What do you think? Not okay. Is it met? Yes or no? It's got to either be strong or not. You want me to make that bigger so you can see it? Guys, this is one of the things that are going to happen is when you post in my room, I'm going to ask you to get into the lesson with me. So you're absolutely right. Rule number 1 is not met. And I'm not sure what market this is, and so I don't know if these pink 1-to-1s are important. Are you using a 13-2 for your large chart? If you are, then you're absolutely right. Once those large sugars break up, you do have a clear path. So what we're looking for over here, and this is kind of a way that we'll do it. And L, you've probably heard this, maybe you haven't, but I am going to go back to, whoops, a crazy concept that seems to help people. So when I'm looking at the chart, I can already say without hesitation, I don't have momentum, right? Doesn't mean that there's not a trade, but what it says to me is, oh man, I'm going to have to lean on clear path and entry if I want to take a medium probability trade. And you have the clear path. You read that beautifully. That's your breakout, 100%. So what we're doing right now is we're working with 50% of our advantages on the large chart. And that's not a deal breaker, L. That just means that if I use the perfect entry, I'll have to manage. I can't type. And the one thing that you didn't get, L, was the perfect entry. You never got to pull back to an area inside of triggers to give you that opportunity. Does that make sense? So that bad boy's off the table too. And the cool thing is this is not a fail. This is not a fail at all. This is you doing great things with only 25% of your advantages, or even better, this is you choosing not to do anything with only 25% of your advantages. And who cares if the market went up there? There's so much more money to be made. What market is this? It looks like it moves pretty good. Is that the YM or FX? Okay. It looks like it moves pretty nice. So let's see. Over here by those fibs, potential to break, pull back to the area inside of triggers, pull back to the area inside of triggers. Even up here, when the breakout is almost done and most of the triggers are through, even there's a pullback to an area inside of triggers. So you could do like 2 out of 3, 4 or 5 times rolling up. Does that make sense? Yeah, but don't call that a fail, man. That's you doing smart stuff. And that's one of the great things about posting in the room is you may think you messed something up when the reality is you're really pretty awesome. Was thinking trigs haven't reached area, but price counts. So, Michelle, it is 2 parts. Good. That's what I'm here for, is to make you feel better. So, Michelle, this is one of the things that I need you to memorize, okay? Price reaches. That's the first thing. They have to go in order. No triggers through. So your triggers may be way away from a termination condition. Let's go see if we can find a real example of it for you. Because I like doing it. Here's a good example. Price reaches support. Look how far away the triggers are. That is like rock star termination. Sometimes they're close. Price reach this divergence low. Look at how far the triggers are. So first it's price reaches, and then it's where are my triggers. So on your particular picture, and you and Nathan are kind of doing the same thing. Do you count that as price reached? It's up to you. Nathan says if it doesn't actually hit it, he'll still take the trade and see how things work out. And Nathan's going to find out over the next 6 months that a tick is more than close enough. But if you're saying it's not reached, you had all the momentum, you still had room to go back to that fib, you took the perfect entry, and your stop is a little bit tight. It needs to go 5 ticks below the triggers. Does that make sense? Didn't fill your entry on the first pullback, so you jumped in and made some money. So shush, she knew where her target was, and even though she didn't get the entry, she's like, well, I'll just jump in and see if it goes, right? Michelle, how often does that work for you? Because they came right back. And then this one, your stop's just in the wrong spot. So if you're trying to follow the KISS plan, that's not it. Sometimes it's just not your money. Great job, Michelle. And guys, the rules say price reaches an area. Nathan, go to the other room. Just hit mute. Don't listen to me. Don't listen to me right now. If you're trying to trade the KISS plan 100%, price has to reach that area. If I'm a tick, that's good enough for me. If I'm a tick with a loss of momentum, that's good enough for me. If I'm a tick with a loss of momentum and no separation between the small and large, that's good enough for me. That's my small chart telling me, Mark, you're probably not going to touch that fib. But if you're going through the KISS plan, and you want to be by the letter until the KISS plan is so ingrained in your brain that there is no room for any opinion, this is your trade. Take and manage, right? Take and manage. So neither of you are wrong. Price did not reach the area. Is that good? But remember, you will craft a plan tailored to your personal goals based on your experience reading the indicators. So guys, with some reps under your belt, you will grow outside of this plan. And what you would do is watch this. No termination conditions on the 13-2. That tells me, this is pretty cool. You're gonna dig this maybe. That tells me that if price reaches an area and the triggers remain below resistance or above support, rule number 2 is not met, right? That is your core. That is your foundation. And then you go back to your KISS plan with a little experience. And what you do is you do this. Can't be closer than 2 ticks, right? So what you've done is, based on your experience reading the indicators, you have created a plan that suits your needs. But until you can do this perfect, don't complicate it. Does that make sense, everybody? Until you can do it perfect, don't complicate it. Let it be very, very black and white. But you are headed someplace else eventually. We all are. Good job, Michelle. All right, triggers are up. Pull back to the area. Close above. Make money. Lucy, I wouldn't have let you in my class if I knew you were going to be this good this fast. Have you guys noticed that she doesn't write a lot on her chart? Sorry, Lucy, I'm going to put you on a pedestal for a second. Triggers are up. I want to see room to targets, though. I want you to keep talking about that so that it's ingrained in your brain. Pull back to an area. Close above the small, right? So you're making this second nature. And you're not hesitating, which I love. Are you actually taking these, or are you doing these after the fact? Because you get the pattern. You understand the patterns. You know the rules. Good job. Did you think it would be this easy? You're taking them in paper trading? Will you do me a favor? Excuse me, will you do me a favor? Will you click this little hexagonal nut down here and go to more settings and go to trading and get those executions on there? I want to see your entries and exits because there's a lot of information in that, Lucy. It's easy, and I'm not saying that you're doing this. I would never suggest, right? Not after all we've been through. I would never suggest that this isn't really where you're taking an entry. But if you have those executions on there, you'll be able to gauge your timing. You'll be able to gauge your exits. You'll see all of that after the fact. And it's great because a lot of times you guys will tell me this was your entry, right? When really you entered over here and got run over and sat through all this stuff with crazy stops. And you're convincing yourself that you're doing it right in annotation, but we want to make sure that you're doing it right in execution. So guys, showing me your actual entries and exits is huge. It's really helpful for long term. But great read, great trade. 11 out of 11, Victor. Pull back to the mid band, close above, make money. I'm telling you, Victor, trend trades agree with you, brother. Paul, pull back to the area, close above, make money. I like your willingness to get paid. Is it making a difference, Paul, in your P&L, taking those first profits? Good. Good, good, good. I know. I'm getting there, Victor. I'm getting there. I'm doing them in order, brother. I'm doing them in order. It really does, doesn't it, Paul? I was talking to John yesterday, and I'm trading a $250,000 account, and I told him I can trade a 10 lot. And when you take the right trades, it's rare that they don't go to $100 in profit. And I can take $1,000 off in a matter of seconds. Just a willingness to get paid seems to pay pretty big dividends. Trend is up. Transition. Manage assertively. Pulls back to the area. Oh, good. Are you reposting them, Victor, because you don't believe I'll look at them? Like a kid. All right. I'm going to beat your ass. You ready? Here we go, Victor. What's up, Alexandro? Price pulls back to support. Does everyone agree? Victor, do you agree that that is support? That's where your entry could come from? Okay. When that full bar breaks below, Victor, your support becomes resistance. Your resistance does not become support again until this bar. You took a trade directly into resistance. Directly into resistance. You did not take a trend trade from support. It didn't reach the one-to-ones. This is not support. And I know that you won and you're happy with your win, but that's the prairie dog. This is the one that historically pulls an awful lot of money out of a lot of accounts. Does that make sense? It's your right to do whatever you want, and I'm glad you passed the evaluation. Is breaking these rules, are breaking these rules going to serve you long term? So what entry is this? What is that? You said that was your entry and you missed it. Do you see how that's not your entry? Not at all? There was no entry. You just jumped in and hoped for the best. That's all it is. Jumped in, hope for the best. And today you got it. Today you got the best. That's awesome when that happens, guys. It really is. But if there are no rules met for a trend trade here, you can't call that a trend trade, can you? So we change our annotation. And we don't lie to ourselves. And we say, why is the call out not working? All right, my Snagit's going crazy right now. Yeah, so you just jumped the fudge in. But Victor, you jumped the fudge in from the weak side of the triggers. Absolutely no push on the large chart. You jumped the fudge in after the market had already reached its termination condition and appears to be rolling. You jump the fudge in right at a midband. You jump the fudge in directly into an HVA after a termination, right? There's a million things that could have gone wrong with this trade that didn't. So I go back to, and this is just what I do. What is wrong with? So I always go back to this one concept. Great trades will fail. Poor trades will win. It's about execution of the method that has been proven to win more than it loses. Because if you believe that your poor trades that win are more likely to win than they don't, your brain doesn't know. Your brain, the dopamine says, look at this. I just won, right? Or your brain says, there had to be something wrong with this trade because it lost. And you put this huge emphasis on the result. But if you focus on the method, and guys, I want you to all just kind of self-reflect for a second. When you go outside of the proven method, do you win more than you lose? And maybe you do. And if you do, guess what? Rewrite your plan. You found an edge. But most of us find that when we begin to deviate and break that many rules in one sitting, we're gifted little winners that make us believe that it's the right path. And then when we go live, right, you pass your evaluation, you go to your semi-live, and then suddenly jumping in directly into a mid-band from the weak side of triggers after a termination kicks your ass 17 ways. And you're like, but that's a winning look. And Victor, I'm just using your chart for an example here. Please don't feel like I'm coming after you because we've all done it, right? Triggers are still up. Yeah, but so this is my little psychology for longevity, right? You'll never know what the market's going to do. You'll never know if you're going to win or lose. But you don't have to. You don't have to win more than you lose. That's where you have to focus on a pattern that you can prove wins more than it loses. And then Victor, that's pretty much your same entry. And this one doesn't win, and wrong side. And it's about longevity, guys. And I hope it doesn't feel like I'm trying to keep you guys from taking trades, right? You can trade into this termination condition and win a trade and feel great about it and like, yes, it won. And then you come take it over here and you're like, but wait a minute, I had no divergence in an area inside of triggers. How come it lost? Because 70 to 80% of the time, that loses. 20 to 30% of the time, that wins. You have to know which side of the edge that you're on. Are you on the good side of it? Are you on the bad side of it? Are you on the pattern that wins more than it loses? Or are you winning a few on the pattern that loses more than it wins? I don't tell you guys when to trade, but I love to point out when you get lucky. Because it's my hope that somewhere it clicks. Oh my gosh. I have to stop getting lucky and I got to focus on process. Great stuff, Victor. And congratulations on passing your evaluation. Feels good, doesn't it? Feels good to pass that evaluation. I know that it does. I know that it does. And now the test. Can you do the same thing live that got you there, right? Can you dance with the girl you brung? All right, guys, I'm going to step out for just a second. When I come back, the classroom belongs to you. We've made it through all of the pictures. We've talked about everything that you guys have posted in the room that you want to talk about. So do me a favor, help me out. Give me something to chat about when we get back. Let me know what's on your mind and what I can help you with. I'll see you in just a couple minutes. Wrong. What do you say? You know, there's two things that really excite me from my students. The first one is when you guys tell me that you pass an evaluation, because it means that you're starting to settle into rules, right? You're starting to settle in and trading patterns and doing things and repeating processes. The other side, the other thing that really makes me happy is when you guys send me a picture of your payout receipt, where you actually took it to the funding company and had success. And I'm going to tell just a little story, and then we'll look at your chart, Pete. Is I get a lot more evaluations passed than I get payment pictures. And the reason is, and I just want to put this out there and give you guys something to think about as you move forward, is most of the time in the evaluation, we really latch on to what we know brings us success, right? I know that the trend trade brings me success, and I know that not fighting those things on a 50-50 brings me success, and I know that not trading into areas brings me success, and I know that waiting for the pullback brings me success. And guys, what you're doing is, as a brand new user going into that evaluation, you're adamant about passing, right? And I know how to pass it, and I know what it's going to take to do it. And then you get into the semi-live, or you get to that funded PA, whichever company you're with, and now the only thing that you're focused on is making money. Well, I know my rules aren't met for a short trade, but what if it goes anyway, right? How much money would I make is if, even though I didn't break my rules, right? Look, they're behind or below resistance. I've got to go short, because if it wins, oh my gosh, that's going to be worth a couple $100, right? Man, hold on. Now let me go short with 10, because now if it works, I can make thousands of dollars and be crazy, just awesome, in such a good position. And I know my rules aren't met, but what if? What if it works? And guys, that what if monster will absolutely whip your ass. So when you guys move from evaluation and you get into that money-making opportunity, remember the process. Remember the process that was keeping results coming for you. So momentum, room to trouble. There's the jump in, right? Momentum entry with momentum. I love this. And Pete says, you know, if this fails, it turns into a trend trade. And yeah, you might have effed that one up a little bit. I didn't move my stop, which was right in an area inside of triggers. Do you guys remember when we talked about that earlier? How you'll get to a point where you're like, man, there's no way I'll ever put a stop. And then you realize that sometimes even some of the best traders in here do it on accident, right? And he goes, shoot, that was my trend trade entry. And he goes, well, I'll catch it on the way up. We saw this one too, right? Well, it didn't get me, so I'm just going to jump in. And then they come back, and Pete's like, son of a gun. But this time he's waiting for it. Got in with the right add-on, right at the area. And look at that. Sure enough, it fulfills all the expectations. Pete, this is an amazing recovery from a mistake. We all make mistakes. Look at the recovery. That was the adrenaline entry. Oh, shit. And then he's like, okay, just calm it. What's going on? There it is. I love this. Good stuff, man. Great stuff, Pete. That's good for the new kids to see, I think. That's good for the new kids to see. Everybody makes mistakes. Everybody makes mistakes. I make mistakes. You make mistakes. We make mistakes. They make mistakes. So here's the question. Did anybody else in the room catch the trade? Did anybody else in the room see this and say, that fits the bill? Or was the weak top a killer for you? Or weak bottom a killer for you? Yeah. Watch this. You ready, Alessandro? I'm in a trade. I'm out of a trade. You're in control 100%. 100%. You're in control. This is not Ronco set it and forget it, guys. Yeah. If I'm in the funded account, Alessandro, and I'm like, oh, I'm long and I really hope it makes it to that fib, right? And I'm excited. Please get there. Please get there. Please get there. And then it starts coming back. And I'm like, oh my gosh, it's now I've got a divergence, a third divergence or whatever. Yeah, you can close it. That's your right. In a funded account, you should be even more in tune with your management. It's your trade, it's your money. You guys can do whatever you want with it. You know what one of the easiest things to do is, Alexandro? And what a great segue. Um, every time you enter the market, every time you enter the market, let there be a name. Yeah, no worries. If it prints lines after you get in, if something changes and you need to adjust, yeah, that's good trading, Alessandro. That's good trading. That's smart. That's awareness. That's your right. So, guys, when I name my trades, I know the exact rules that get me in. But here's the side that we miss out on as brand new users. I know the exact rules to get me out. So I'm entering a high probability trend trade, not because I'm hoping to make money or impress girls. I'm entering a high probability trend trade because momentum, clear path, and entry have all come into place, right? And because this is the perfect trade, I have a plan. And if you're brand new, you're probably using the KISS plan, which says, and we saw a great example of that earlier from Nathan, that if you take profits, you go break even, right? And Nathan got stopped out at break even the same way Pete did. Pete calls it a mistake. Nathan calls it following the plan. Great job, both of you, right? But you know exactly how you're going to manage it. And then, with some time, you begin to see things that make it better. Chart reads that make entries better, that make management better, that make profit taking better, that make holding for bigger moves better, right? And you write your own plan, but it is still the plan that's associated with the high probability trend trade. And if you take a 50-50 trade, there's a different management plan. And if you take a momentum trade, there's a different management plan. And if there's an HVA trade, there's a different management plan. So what you're doing is you're saying, this is exactly what it takes to get me in, and here's exactly what it takes to get me out. And when you can get to that level where it's all second nature, where before I ever pull the trigger on this trade, I know exactly how I'm going to manage that trade, guys, then your emotions have a hard time sneaking in. Your opinions have a hard time sneaking in. So naming your trades, I think, is such an important part. That's a little sidebar there, right? Man, I open a lot of stuff, don't I? I see John Novak snuck in. John, that's not a bottom feeder. That's an opportunist letting the people in control take the lead. That's my untitled workspace. Let me get rid of that and get us back up. There we go. Crude oil, look at that. The termination condition worked, didn't it? And because it was a no triggers through termination and it reversed the market, now it's what we call a strong bottom. And with odds favorable momentum, my plan says if I get 3 triggers through and a pullback to an area inside of triggers, my rules are met for a long trade. Pretty cool, right? I know what has to happen before it ever happens. I know where my trade will come from before it ever sets up. I know what my rules are and what they look like before I ever even consider taking a trade. There's the NASDAQ here, and it says that the triggers are down. It also says that I have room to trouble. There's my pullback to resistance. That was my close below, but it was directly into a mid-band, which could create a bounce. Not squat to do here. Amen, John. John's like, I don't have any rules met. I'm going to come hang out in the room. I love it. So you can say thanks for hiring his brother to teach. There you go. I'm heading down to Sarasota tomorrow. John's got to go practice up. We're playing a scramble against some other family members. So we got to beat them. And believe it or not, Novak men tend to swing a little more aggressive than they need to, which creates problems. So guys, are we working with support or resistance here? What do you think? In the moment, it's still resistance, isn't it? Let's just turn it into a lesson. Until I get a full bar above, that's still resistance. And since I never got a full bar below, that's still support. And over here, it remained resistance. Oops, and everything just shifted, right? So now, who knows? They may be running, but my trend is down, so I don't have rules. It should be a good time, Michelle. And my youngest son is flying into Sarasota tomorrow, so I get to see my kiddo too. And he gets to see Uncle John and Aunt Minda. They're the perfect aunt and uncle. They are so much fun. They are the coolest. My youngest son, he's 21. He goes, I've never been drunk on a boat. And we're like, yeah, we can handle that. We can make that happen, kid. Not that we encourage drinking in excess, but if you're going to do it with chaperones. What do you guys want to talk about? It's 11:30. We still have time. There's probably lots of knowledge. John, what do you think? Let's ask John. John, what do you think is one of the biggest killers for new users? What makes traders fail? John's got almost 30 years of training traders. Can you whittle it down? Why do traders fail? I have my thoughts on it. I want to see if they line up with yours. We're going to open up the NASDAQ too because it's fun. Why do you guys think traders fail? Have you ever Googled it? Have you ever said, I don't want to be one of the people that fail. How do I avoid it? I did. And in my life, it's 100% true. I'll type it into the room. Most traders fail because they don't follow a plan. Because they don't do the same thing. They're relying on hope and they're chasing money and they're not doing the same thing, guys. And a plan is only as good as your ability to execute it. Right? Like I can get a diet. Let's see if we can do bad Novak man analogies. Easy diet for weight loss. I bet there's a million of those in here, right? I love this. So how do I lose weight? I'm going to eat more vegetables, lean protein, and reduce added sugars, drinking more water, right? That seems pretty easy, doesn't it? That's it right there. That is the entire simple plan for me to lose 1 to 2 pounds a week. When does it not work? When I stop following it. Guys, your plans are just like that. Every diet works until you get off of it. Every diet works until you exchange lean proteins for Twinkies. So the idea is that we find what works. That's what we're here for. We've done a lot of research, a lot of time, a lot of study, put a lot of effort into giving you guys amazing plans. And now you start learning those plans, you start trusting those plans, and then you figure out how to commit to those plans. And when price reaches Fibonacci resistance and the triggers don't break, you learn how to stay out of that trade. You learn how to say, my advantage is gone. I choose not to enter here. That's not on my diet. All right, that's my bad analogy for the day. All right, I'm going to kill the YouTube because it looks